Welcome back to another live trading session. We are here back in trading for NY session, and I believe you guys also ready for today's session after our previous London session successfully closed one successful trade. Now at the moment the market again currently trending, so we are beginning another trading session here, and I would like to say that all the members are here. If you are here, make sure that you do two things. One is make sure you smash the like button, and also let us know that you are here on the live chat so we can begin today's analysis as well as trade setup for this NY session. Gold, as well as we will be looking at euro dollar. We have successfully closed the euro dollar trade previously. Now looking at this market structure on euro USD to see that where the price action is heading. So euro dollar also we have successfully closed one trade, and we are looking for some new trading opportunity here as well. Now let's look at here on, if you look at that XAUUSD, gold currently trending, and I'm going to do a full multiple time frame analysis on gold to see that how we can find trading opportunity in this session. So let's begin. We'll be doing a complete analysis, looking at first of all daily chart to see that overall picture in this market. Are you guys ready for daily move here on gold? This is gonna be huge today as well as every single day. As the market, you can see that sharply in a downtrend going back to the upside, and it looks like it might go back to the weekly gap open, or it's a pullback. You know, the best time that I like in the chart is when a trending market goes for a pullback, because that's where the entry is, right? So let's begin that one here. You can see that this is the weekly gap open here at this level, and with this gap open that you can see, so this is the gap level on the weekly chart on gold. And with this gap level that you can see, the market after the gap level has broken back below. And with this breaking below, this is a red bear candle that you can see at this movement. And with this red bear candle on, if you look at that here on XAUUSD, the market may here come back below potentially to create a new low. If you look at the daily chart, that you can see where there was a gap open as well on the daily time frame. So with this gap open, the market has, if you look at that here, reacted back below that you can see in this area. So with this movement, as if you look at that, there is a gap open and the market is having that reaction back below here. We can see the price action now, if you look at that, slowly building its momentum back below. From the daily, yesterday there was a pretty large red bear candle, and this daily move that we can see on gold. Good evening. I'm pausing for a minute to see everyone here, and then again resuming analysis. So make sure you relax, sit relax. We had a successful trade, and okay, and make sure your chat is rolling, guys. Let us know your feedback. Now what you can see here, thank you, greetings. Here, this is currently, it's a large red bear candle that you can see, and of this large red bear candle, once the market managed to cross this high here, if you look at that, you know, going back to the upside liquidity zone, you could see that continuation of this market structure here. Okay, so if you see that the market has finally reversed off this level, that could be to look at the new lower low. So this is the daily support here that you can see. And also this is the daily resistance line that you can see at this level. Now going to the 4 hour here, the sessions, now you can see that this is the weekly opening. Some might think of going back to the weekly opening. That's gonna be huge if that happens. But I think the market, may not be going that far. However, here, looking at 1 hour, the price has just broken this high, getting the reaction back below. So this is the price action that I really want to look at now. From the 1 hour that you can see, there is, if you look at that, this is the 1 hour price action. Okay, with this 1 hour consolidation zone that you can see at that level. So with this breakup structure that you can see, the market now started to melt down back below here that you can see in this area, which could eventually come down to, if you look at that, below this level here. It might even come back down here. Okay, now going to the 15-minute chart, where double top, with this double top here, that you can see the market has created this large red candle. All right, so we see that there is some rejection now. I don't want to jump on trade yet for sell, because we still don't need a false breakout or a valid breakout. So especially we will be focusing on now on the intraday price action. That means that 4 hour level, because in this 4 hour time frame we see the market is still maintaining that series of higher low. This is the session's low, and also this is the session's high. And with this session's low and the session's high here, that the market may eventually break that low here that you could see in this area. Okay, so with a long 5 minutes pin bar that you could see here, the market to have that reaction back below. And with a support area here that you can see, pretty long weak candle. This is a breakup structure, but at the same time, in this kind of situation, I would look for going long, but I'm not going it. There's only one reason, is the major trend here is bearish, guys. This is, I really want to clarify all the time. And that's how if this move, that what we can see here is in the direction of the trend, I would look to go long. But patience is key. Will be opening. We had our previous trade that, for those who have seen that, in our previous session, we have successfully closed a profitable trade, and this session as well, we want to close again potentially another profitable trade, but fully risk managed. That's the key. Always keep your risk managed, and that's how you start to see the profit over time. So here is that you can see the market of this level, that from here created this low of this support level that you can see. So that being said, if you look at here, the market is at this support area, and of this support we could see drop or continuation of this market here. And now, along with this also, I would like to look at the current sentiment in the market, and also today is very important, as you know that coming up CPI, right? Okay, so let's look at here on this. If you look at here, you can see this is today 14th of July, which is the CPI. Okay, now core CPI, four of them coming, and also there will be Fed Chairman Walsh will testify. Look at that on later. So there is a big move ahead. Okay, get ready for it. And so what I think that with this current market movement is potential for, what do you think? I think that liquidity grab and drop again or reversal. So we'll be doing also a poll to see that what majority of the people are thinking. Okay, so we'll see that here. So with this movement that you can see, this is the initial move back below to this support, and here is the initial bounce pullback and the move deeper pullback here, which is showing up that XAUUSD potentially to here. So this market with the upcoming CPI could have that spike. And for me, what I think that room is still in this direction here. There is an imbalance here, significant. What do you think? Let us know in the chat. But I see that here the liquidity is, if you look at, there's an initial liquidity sweep. The market can still break below, and if it successfully break below, most likely we'll see the daily support. Okay, so that being said, here I'm looking at for our initial trade setup just after the CPI. We still have the 15 minutes to go, and I'd like to start with a poll to ask you what's your bias on CPI. So bias on gold with CPI. Do you think that spike up? So let's predict the spike. So share your thought and with the current CPI data. What do you think that here? So with this current, if you look at this is the recent level of resistance line here at this level. And see gold hitting 4075, before that bounce to bottom 4075. So it's your idea. I'm assuming that you're looking at this doji, daily doji to the order block. Okay. The level that I can see potentially gold to have a rejection is the previous. If you look at the previous resistance, which is previous support turn resistance here at this level, and we will be completely relying on the price action. So if you look at that, we'll be completely relying on the price action. So if you look at that here, that you can see this is the current market structure, and with this current market structure, so far here it's trying to create in this area a downside movement. The best way is to observe the price action. So a little bit. Also you guys can cast see 13 votes, CPI spike up 13%, 38%, spike down 62%. Okay. Here we might see what I think that with the data spike up and then can reverse back with an initial spike up, and the market can reverse back. That could be the situation here on XAUUSD. Now, going to look at the current sentiment. Before we see that all of them, we'll have an overall understanding of what is going on around the geopolitics, economics, as well as other factors. Give us additional edge in the market. Trading is all about edge. We'll be discussing on that. So we have some recent breaking news. Iran's army spokesperson, Strait of Hormuz won't open with US aggression and war. SNN, okay. There's another one here. Trump very serious about 20% fee plan for Hormuz. Semaphore, I think it's a news agency. Okay. And US falling gas prices likely cut inflation last month, but renewal of Iran war could undo progress. So yeah, we saw that WTI also was so energy was in a downtrend, and with renewal war could bring that things back again. So it was red folder news. Japan Finmin, Katayama, sharp shift in asset management environment could prompt review of GPIF portfolio. So that was categorized as the red folder news. If we look at that here, oil extends recovery, US dollar consolidate. So these are some of the speculative news. I think the most important news for this session so far, we will be looking at that on CPI. And with CPI, data really factors. So this is after a long gap. So we saw that there was a long gap with the dollar news. Last one we see on 9th of July, also is tentative. So the last red folder news came with 7th of July, which is almost a week earlier. So today's CPI will carry important confluence, guys. This could be a big market move, but it's because after a long gap. And also there is coming up 12 a.m. Fed Chair Walsh will testify, which also will give significant move in this market. Be back just a minute. So you see that 20 vote 50 spike up and down. Can you change it? Thank you. Few votes this way and that way can change. It's still 50-50. So here, so far, this price action, I'm looking at this 5 minutes. Only this zone shows upside. Okay, this kind of market structure usually is an upside. So that means spike can create to the upside. But if we see that trend, meeting with the global direction, that's what we will be looking at entry. Now, as you will not be trading the spike, but we have potentially possible direction here. There is a potential for upside, but it still can come down, so it's always probability. If you look at that, in what situation that I am thinking that the market may go for at least short-term upside. Let's understand that price action, how I read the price action, and that also part of understanding the market structure. You see that here, this green candle back to back, 3 of them has meaning. Okay, it has a volume to it. If there isn't much volume, it has a confluence. So first of all, if let's say this is not a news time, that I would look for going long around this zone here. The reason is, if you look at that, you can see this is a one single move back, and 3 candles here has grabbed that liquidity of this level, crossing both 10 and 20 MA, and you can see how the candlestick pattern arranged. This is how I read the market, and that's a stronger confluence for going up. So if you look at that from this point, if you consider to this point to this point, this is the probability. That's how trading is, guys. So if you look at from this point, so If you look at, if you ask, let's say, you can flip a coin, right, with 50-50 probability. If you flip a coin, there's 50-50 probability. And if I tell you, if I buy here, will go there. If I sell here, will come there, right? So 50-50. But if you add confluence to it, that's where you started to see that your probability goes above 50%, and that is trading. Manage your risk, trade accordingly. That's a practical trading, that without relying with anyone. That's a practical trading, learning to trade, learning to grow. And if you are looking at here, that is what you can see. I would say from here to going there is around 65 to 70% probability. Okay, so if it is 70% probability, then it's a very high quality trade, like that. Next thing is remaining is the managing your risk. Okay, so you can see that here. Again, don't misunderstood the teamwork and relying. We as a trader, we rely on each other. I rely on all of you, okay? Because that's how we have a community, especially in trading, guys. It's very rare to find a trader in your circle, and I'm sure that you experience the same. That's why we here build that community, and we rely on each other for supporting as a trader. And also make sure you support this channel by smashing the like button. And also the premium entry is currently fully discounted. Okay, so I'm sharing the fully discounted coupon shortly, just after the news. Stay tuned for that, where you can access the premium entry completely. In news, gold can go up maybe. Okay, so I wouldn't recommend anyone just to open a gamble trade. Wait for the market to show its direction, and I'm not going to. Usually I don't open any trade just with the news, because it's not worth opening with the news. Better to wait to see clear market direction after the news. When the market settles, the move that really tradable will come on to you, and you'll see that those kind of move are identical. Okay, spike up. That's a big spike up, huge. Okay, you can see that the market is really moved back to the upside. Huge spike up. All right, so you can see that the market has moved back to the upside. Pretty big. Okay, so when crude oil price action was 46, gold was 4,000 level. Now crude oil at 80 and gold price action is 4027. Any secret behind it? Okay, so when crude oil price action was 78, gold was 4,000 level. Usually there is a relationship between energy and metal. Okay, but these days it is changing. I will explain later why it is changing. Okay, but let's first, we'll be opening an entry. Once we can find an entry, then we can look at development, talking about the trading psychology and development. Now what you can see here, guys, this is currently going to weekly resistance. Okay, so there is a weekly key level that you can see. There's a gap open here from the weekly, right? And this move, if you look at the weekly, and also I'd like to look at the monthly to see actually what kind of market structure is forming. I'll not be surprised to see the entire change of trend. This is a massive volume up that you can see. Okay, it's a big spike up. Okay, you can see that. Good morning, thank you. So we can see that there is a significant spike up as the market has reached that level, we could see the price action to go back again to retest that weekly gap. And after this retesting this weekly gap, we'll see that if the market is showing any kind of sign of reversal of this, which can happen, and we might even to look for a reversal trade if we see that after this gap open, the market triggers the liquidity of this. Okay, still I'm open in both direction to see that overall market directional bias here. Just crossing this weekly high. So that's a big move happened to the upside here, and with this movement, looking forward to see the market to go back again to the weekly resistance line. Most likely you'll see hit to that weekly resistance or okay, so we are waiting to see that to happen. Okay, so with this narrow red candle, there is a breakout. Now usually this breakout can end up going higher, okay, and then can reverse, or we can see even reversal earlier, but no way we can go for any long trade here at this moment. Look, the market has gone well below here. It's always a good idea to wait unless we see a big shift in the market sentiment. So I'm mostly focusing on the 1 minute chart to see that trend has. Now you will not be surprised to see straight coming drop back below here. Okay, now from here we want to see another move, and because this is in a zone where we neither can go long nor short, because the market is approaching the weekly resistance line. This is a very important level, and of this weekly resistance we could see the price to retest and then to return again back below. Do you think, okay, good morning, okay, do you think this can be a liquidity sweep and break below 4,000? Very highly likely. Okay, that the only thing, the market is coming off this low here, but when I'm looking at the weekly, okay, if you look at that, when I'm looking at the weekly, this is very high probability to come down here, because see the weekly price action, as soon as the market open, it entirely dropped below. And if you look at the overall weekly price action that you can see, you see this is the weekly market structure, and that's a weekly from here, one single move back below here. And with this movement that you can see, the price has pulled back, and this week, as soon as the market open, after the price action gap open, the price has dropped to this support, and now you can see from here it's a one single move again to the upside. So once the price near there or retest that, very highly likely the market will try to fill that wick again, and that can drive that market back below. So therefore the very high confluence sell area will be from this weekly gap. Okay, now depending on how the price action is creating in this zone is what we are mostly looking at. If this move goes up and fail to create a higher high, strongly reverse, will go for sell. And in case the market is going to hit that weekly, see this one, this zone, we will actively looking for sell opportunity here, because there was a gap open. Once the market is going to hit that level, there will be a huge imbalance will be created in this direction here, and that can bring that market well below, almost to this support here. So of this level, slowly trying to push here back in this area that has okay, so with this 1 hour, this is a very large move that we can see. It almost see that order block. You know, going up here, it's gonna be really good area for the market. If the next 15 minutes goes up here and candle close, it's gonna be huge. And a candle close is important because you want to see that what kind of candle close coming with the 1 hour price action. So you can see a gap open on T4, I think. So we could see that upside here, and of this upside momentum, we could see that the market to come down back here in this market. Okay, some break below here, and just looking to see if we can see that continuation of this the price action. Keep eye on the 1 minute chart to see for a potential reversal at this level. Sometimes become impatient. What about what we can see with this data here on CPI? So with CPI data that we can see core 0.2%, core CPI 2.8%, minus 0.1%, 3. So comparatively lower than what was forecast. And what we can see here on DXY, we have seen that there is an initial move back below. And what I think that with this movement on DXY, that might be, if you look at that, the weekly price action, there's a weekly doji. The market, what I think that here coming from the technical point of view, is coming to this previous resistance and support here, breaking below can create this upside bias again, and I do not consider it as still a reversal. Instead, this break below on dollar index can bring more volume for upside again. So That said, if you look at the 1 hour here, it's from the weekly and also from the monthly. So depending on how the market structure creates. Was the CPI data significant enough for interest rate to go down, or is it vital? It's not fully, like, it's just a piece of the whole picture, right? So CPI data, I mostly look at the NFP is what you account for. NFP data. CPI is not that much of important for the interest rate. There is some significance, of course. All data add up to the decision making. They all add up, but the weight of this data is not as important as, for example, NFP, especially the NFP, okay? And all other data same other than NFP. So data usually, you won't find always same confluence throughout the year. There will be some fluctuation, but the overall market also correct itself. You see that when, let me tell you something, even in a healthy market there is oversold and overbought, right? We have seen the RSI. In a healthy market you'll see that overbought market, oversold market. When this happens, the market has to correct itself, otherwise the trend will not progress. So in data also like that, there has to be some self correction. Okay, here now it's in this area that we can see the market creating a downtrend in overall, that you can see here in this area. So here at the moment we can see some movement happening. So with this movement, you can see narrow pullback, another narrow pullback. So here is what we are looking at for this market to show here. Will this spike up sustain? So far we can see that as it seems like very highly likely that it's gonna reverse. We'll see that. I'm waiting for the lower time frame price action confirmation for an entry. As to enter the sell, we will be waiting for the price action confirmation here in this market. So far you see the break below, and with the 1 hour candle close, so you can see that here in this area the market is slowly turning to in a downtrend. So of this downtrend here now, okay, if you look at this downtrend, of this downtrend, as soon as the market is going up for this pullback, we will be looking at sell entry here in this market. We might be able to look for this sell entry here in this market. Okay, so we are almost ending to this 1 hour candle close. getting some upside here. So we're looking to see before the 1 hour candle close, and with 1 hour close, that if you look at this, is a pretty large bullish candle. Now we'll determine, we'll see that if the market is trending here to the upside again, waiting for the candle close, and then we can look at that entry. Potentially we could see that here for coming down. Going back to this weekly resistance. So there is an initial breakup structure that you can see here. Price action shows a strong bullish confluence in this area. So with a gap open, you can see it's trying to push back here. We see resuming uptrend. Oil and gold both up. Yeah, oil is because there is a Strait of Hormuz closed, and also some other factors such as the geopolitical and war escalation has given bullish momentum on WTI. If you look at on gold here, that you can see the market also in this area, that once we see the directional bias, clearly we can look at entry. This market can continue to drop, or you could see upside here. And once we see that directional bias confirmation, we can look at this entry. But here you see there is a long wick left. It is not unusual to see they're going to fill the long wick, go back here, or enter a drop back below. There's a very strong bullish confluence here at this support level. So So of this level that you can see that the market is maintaining. If you look at that here, showing up that there is some resistance, and so of this support that you can see the market is creating initial movement here. Now I'm still looking to see where the direction is. Where the direction is very important to look at. Doesn't seem to be very strongly bullish. So with series of lower high that you can see the market slowly trying to break that low, and off this level we might see the market to trend back here and then to return again down back below to the support area. And with this multiple, if you look at that, this is a multiple time frame area where double top and can create this market structure to here return down. If we see that continuation, if you look at the 1 hour, that you can see the bulls is still not getting enough fuel here. Don't you think so? Because gold doesn't pay interest, it becomes relatively more attractive when interest rate falls. Since gold is priced in US dollar, gold often makes gold cheaper for buyers, increasing demand for a really good observation. Good to hear that. And you know, like, knowledge is power, always keep learning. Now if you look at that here, the price trying to break below, and looks like that the buyers not getting enough buying pressure, that you can see slowly trying to break below. So this is, I'm looking for an impulse and the correction. Okay, so if you look at that, this is the current impulse, and unless the market is in a sideways, there's no point of entering the trade. It's gonna just take you out of the trade. So wait for the sideways market to break. Okay, and once you see the trend started, you're gonna see that after this trend continuation, there's going to be a break of structure, and that's why you're going to enter the trade here. And I'm ready for any entry along the way. Okay, keep your attention focused, which is the key, right? And for the right entry, there will be a lot of entries. You see that I'm waiting almost now 1 hour 15 minutes, but we trade a lot. So when there is no trade, there is no trade. When there is trade, there is trade. Okay, that makes you a better trader. Still moving in a sideways. So it is a sideways consolidation, but in this zone here that you can see slowly moving in a sideways, but not a very strong bullish confluence. So therefore going up and then breaking below also possible in this market. So the current 5 minutes chart also showing that. It has left an imbalance here as well. There is a famous quote from JC Livermore. There was no forex that time, only stock. So they are legendary trader, but this is very early when even people didn't think of trading, right? It's in pre-1900. So one of his famous quote is that money comes from sitting, not from trading. Like that way. Money comes from sitting, not from trading. So it's a metaphor for explaining how patient you should be to be a trader. Okay, it's not easy, that's why. There is a tension between the price increasing and the cooling US inflation. Yes, this is where the market, especially the dollar index, is currently. You can see that there are some. Okay, so we are supposed to discuss this point here, right? How the market correct itself. The market is more often goes to an overbought or an oversold condition. So if you look at that, you'll see the market more often goes to that overbought or oversold condition, is because if you look at that, and then the market self correct itself. Okay, so you can see back to back 3 rejection here. Still not showing any direction. Usually for an uptrend, it creates like this pattern, okay, like a cup pattern. So it might just go like that and then going up, okay, but it's creating now this pattern, inverted cup. That price action can go up or can come down. So we see that market self-correct itself, because market is always more often goes for an overbought or oversold condition, is because if you look at, let's say, a market is so imagine that some people are running fast, okay. If something is running fast, especially if you look at the people, you can't, let's say stop, it can't stop immediately. You see that there will be some slippage, you'll go further, need to slowly stop, and that goes beyond, right? The market also like that. When the market is in an uptrend, it should be, for example, this level, and because there's everyone start to buy, it can go further. That's overbought, and then it can come for the correction. Here this market is still showing bullish and also bearish, both. In this area here that you can see there's a doji. Once we can see that confirmation of the trend, then we will be looking at that entry. And also looking at ATR, current ATR is important to look at always. So current ATR on 1 minute, which is around 41, which is a bit of more. So initially it has shown that bullish bias that you can see here. And if it successfully breaks out, we can see potentially coming to this weekly resistance line here. Okay, 4120. Before we go to look at an entry, I'm still not directionally fully ready. This is the 5 minutes price action that you can see. It shows that it is creating a bullish bias here now. All right, so we can see a bullish bias so far in this market. Now 5 minutes bullish engulfer. This is what you can see at this level. Okay, initial we found that impulse here back to the upside. We look for a pullback. We might see that upside here. How many people stop loss here? I might go for a long entry once we can see confirmation. I'm just waiting for the deeper pullback. Okay, so I'm looking at I'm going for a long entry on this market, and so looking for going long here from this level. Stop loss here at 4066.46. And here I'm taking target TP1 at 4109.44. So set TP at have set TP at 4109.44. We can adjust if needed. This is my entry with a very tight stop loss and tight risk management, which is only 166 pip stop loss. So the long position is open. The market shows that here after multiple false breakout shows bullish price action. So I have opened the trade in that direction of the major trend. So there is an imbalance here to the upside. Here at 4094 level, there will be, this is an imbalance. And if you look at that here, it's going to be nearly to 110 pip. So once the market successfully cross this level, we can take little partial profit. pump them. What's going on XAUUSD? Okay, so if we look at that on WTI, DXY shows that some downside movement at the moment. So we traded the trend, and XAUUSD that I have opened that buy in the direction of the major trend here. So looking forward to see some move here. Now with the first move that you can see at 4094, that's gonna be our initial some small amount of profit that I will be taking, but I will not move the stop loss at entry to make this trade more viable. And here, if you look at that, we have traded the trend, and the rest we can leave it on the market. If you look at that here, you can see that it grabbed liquidity of this support level multiple times, and there is a higher chance for this market to go even higher if successfully the market breaks above. Now, if it doesn't, then we might see that, you know, coming down to the support. But my stop loss here little lower, so that in case the market is coming for another liquidity sweep, we still have some room for this market. And we have very smaller risk on this trade. Let's wait to see. And if we see that, however, if we see the market has reverse of that, then it's a false breakout. You know, we can, anytime can change the direction accordingly if needed. So you can see that some move at this level, and I think that that could be the liquidity grab here. Again, the candle closed, and so we're in the price section. However, if it is a false breakout, then the market breaks below entirely, continue to drop, can change direction anytime. But I still think that the market may bounce off this level again, because it has, you know, it's now currently testing this previous resistance here, which is turning support at this level, and very high chance for the market to have its direction again. So the buy trade is going on. Buy trade is going on, and okay, shows that momentum here at this level, and we are looking for that market to create that upside bias to that key level. Okay, so I have shared the same trade in the group, and so far, as you can see, how we can make this decision from the price section. Price section will tell you most of the story. That you can see, you know, that bigger green candle uptrend, now breakout above, retest, potentially to trend back up. However, market is full of false breakout that you can see always happen. If it happens, then we can also anytime can change the direction. But for me, what I think, this is a very high possibility to remain bullish. Gold is still bearish. If it bearish, it can be, in that case we can look at to change. But however, if you see that the market didn't test this weekly gap open, that's what I'm also biased to it. So if the market breaks above, you can look at for the price action to go back to the gap level again. Okay, because the market didn't test the gap yet. So this is a news move that you can see. It's a significantly larger bullish move that has happened. And so it might create here an inverted head and shoulder potentially, and that can if it is creating that inverted head and shoulder, the market might be here going to that upside direction. Okay, cool. It's going that guys. Let me see, my trip is here. Okay, shows bullish bias, and I'm holding for the potentially full profit hit. Which will be around, if we see the successful move back to the upside, 264 pip. Currently I'm running in some profit here. We're waiting to see. What's the entry point? So entry, we have already entered at my entry price that I have shared here. So it's at 4082 is my entry price, and stop level that at 4066. So looking at multiple time frame, we can see that still bullish bias. So because there was a long wick here that you can see from here, just to keep our win high probable, I will just move the profit target little lower here at the double top. Okay, it might reduce, it's only 70 pip, but I think that will increase the probability of hitting the profit target, because there is a top here. As the market, you can see from here, created this low. If the price goes to that level, okay, it's still can go up, but the possibility to drop again is higher. So we will be increasing the possibility for our profit target, moving the TP level at this level, which is 4101.93. Now it's up to you. You still can keep the same profit level. Okay, I just moved the profit level for that reason. TP level at 4101. So we're seeing some upside bullish trend continuation, which is in our direction. Okay, we are running some. Look at that. Okay, why my entry shows here? The entry is moved. Pardon, this is the entry. Yes. So in that case, the stop loss is not here. Come on, why this move? Okay, that's the correct one. So if you look at the trend is still maintaining that upside, and that is what we are at to see that potential trend continuation of this market. All right, so you can see there is a break up structure again, and the market shows that there is a still bullish bias here of this break up structure. We're going to see a move back to the upside from this trading area, and with this movement, if successfully goes up, we're able to see that the market is going to potentially hit that level. create a new higher high. So there is another doji here, which is still at this level. Center sell off. And okay, we can see that this is a another breakup structure of this level, and if this breakup structure is not reversal, then we can look at to see that going back to the upside. It's another breakup trend line here. Now this price action at the moment is very crucial to see that if it is not a reversal, So slowly off this one here, going back here at that level that you can see in this area, which shows price action confluence, and we see that the continuation back here in this market, that to show its directional bias. Okay, what's your bias here? Okay, it's getting a rejection here. It might, this is where you can see there is one block here, another block here, back to back two blocks. The market from the entry got that rejection. So if it is starting a downtrend, any point you will be able to look at that trade. But until it fully changed the trend, it's still in an uptrend, because this is a breakup structure that you can see. It's now below the trend line here. Okay, so this is below this trend line. Now this can be a change of trend and continue to drop back below here, or this is a breakup structure and the market may start to regenerate again back to the upside. And if it goes up here again, that's a really good sign of big move back still to the upside here, right? So we are almost hourly candle close. Now you can see that this is the 1 hour candle close coming, which is large doji swarm, and what you can see on this 1 hour candle. Have a still two directional bias. Now this 1 hour candle close can represent slowdown, or you could see that it is continuation. Okay, getting reaction up. Discipline is key here to be successful. Just you stick to your trade, stick to your settings, one by one trade at a time. Both side look, it looks bearish. Okay, trading against the trend is what kills traders. So what do you think that here we have traded the trend, now the rest is really the market. Okay, for our here, this is a long wick again at the top. Okay, looks like that still grabbing liquidity of this level from the 1 hour. It's kind of interesting market structure. There's a 20 MA. Below this level, there is liquidity. If we break the below, can we go down to 3950? What is your thought? Okay, if downtrend continues, then you could go below this level, okay, which is this daily low. Getting some reaction of the daily. If it breaks below, it can be entirely coming below. Okay, that can happen as well. We'll see that. At the moment here, at the moment, we are still looking for some upside bias. This is the previous hour's high. Still at all those levels, so you understand that which one is what. So we'll keep this one. And it's the previous hour's high, and also there's imbalance here. Now, only this area shows little bearish bias, but we'll see that. This zone here. Okay. Because this is a lower time frame market structure. Still can break above. Okay, here at this level, the market shows upside confluence so far. Okay. pushing that higher. Okay, Wash is talking. Yeah, Kevin Wash, when Kevin Wash is talking, there is always volatility. And after the data is testifying now, so which see that if now guys, this is the we are running this trade, but any point, anytime, just letting you know. If I'm exiting, I'll let you know. And if you are following exactly this trade, anytime, either here or there, if I exit, then I would suggest you exit immediately, and then we can re-enter again. Because if I see that, you know, I'm reach enough profit, or you know, the trade might not go in our favor, very high probability, you know, I usually exit as soon as possible. But I'm still on the trade. Still, I'm looking forward to see that going up. Oil is going down, so if oil goes in, whatever the DXY is so far here, we can see that downside at the moment, and which is basically a trend correction. So from the DXY price action, gold is bullish, so we can say that's why we are bullish on gold. That you can see at this level, but of course we want to see full confluence of the market, because gold sometimes move independently. So here shows DXY going down, yes, okay. But the gold price action in this zone here again is trying to show some bearish bias until we see confirmation fully. Just here, let's wait to see. One or two candlestick pattern is not enough for the entire move. The entire move form with a structure. So if this move, you see that here there is one break above and then there's another one. If that one fail, that might be down, but still the probability is to the upside. As long as I'm trading with probability, as long as I'm probabilistically in my direction, I'm holding the trade. So I do. So that's how, you know, you can reduce the risk, because when you see that, that's what I do. When I see that a trade is not in my favor, even if I'm running small loss, I cut it off. So that way you see that more often you can reduce your risk. So in a trade that you are wrong, you can cut it off halfway, quarter way, you know, 2 quarter. At least you are not going to the full stop loss, right? In a wrong trade. So if you add up this for multiple trades, let's say 20 trades, yeah, if you add up to 20 trades, that's build up more, right? For example, you took each trade 1%, you know, 50 traded 50%, but 20 of them you exited before stop loss, halfway, quarter way, when you see that the price action shows, you know, you are entirely wrong on it. So that will save you almost another 10 to 20% that you can use for high probability winning trades, right? That way you can keep trading. So you can see the market now breaking out. So here, if you look at that at this level, in this zone here, there is a liquidity sweep here. So there was a break below, has broken back to the upside. The chances for to go up is higher. Let's wait to see this happen. And as Kevin Walsh is testifying, the market is also moving. Let's take that move here in this trade. It's going to struggle at this level now. It's taking all those liquidity needed for this movement. I think this is a 4-hour order block. So with this 4-hour candle close, the market has created a very interesting market structure. Now the 5 minutes also with back-to-back 2 candlestick pattern. might now grab more liquidity here. Price action shows that it might be creating I think it might reverse. Let's look at here 1 hour. It's on a, the market is in a critical consolidation. Okay, so if you look at that here, so these 5 minutes that you guys can see a big large red candle. Now this candle close is important because if this one is, it has gained very big amount of liquidity breaking below here, all of this low. This candle moves that could take that price action back again upside here for another higher high. Okay, it's breaking all the action, upside, downside, and then pushing higher. So look at the overall market trend is going in that direction. So here at this point that you can see, if this move, there's a break again, we see there is another bounce back. Now if this is a reversal back, we could see going back to the upside. However, breaking below can create a downtrend again. So it's all about patience and waiting for the candlestick pattern to close. So you can see that here, after breaking all of that, the market shows a possible return of this uptrend, and to see that it's nearly our entry, and to our entry, and can create another wave of move here. If you look at the 1 hour, that shows what I think now the market has crossed the previous hourly low, that has liquidity now, and I think if it successfully move up, you could see that crossing that 4-hour high, can go back again to create a new higher high. That can lead the price action go back to the weekly gap opening. All right, so successful move can create opportunity to extend profit target or extend partial profit target, depending on. But I will not hold any, like I will not move stop loss at entry. If you either take the full profit at any level, holding and moving the stop loss at entry usually more often lead to, if you look at that, the market to come back again, taking the rest of the position. That feels very good, very bad, right? So here is another candle closed, and this is crucial, guys. You want to see that the market is here creating that upside momentum. If that's, you could see that continuation back to the upside here in this market. Okay, was that false breakout again? See that here. Or the market is ranging. This range is an expanded range. It's going up, coming down. If there is a lack of liquidity, potentially the market not being able to move. Thank you. So it seems like the market is still not finding any clear direction here. Okay, so you can see that both direction the market is moving, and we see that the 5 minutes candle close, and then the 15 minutes is also closing with a large red bear candle. So there is another 30 minutes candle closed, and with this one closed here, left a long wick at the bottom. So the market is so far trying to push here back up. Okay, so potentially to trying to push, but it's not getting enough liquidity. That's where you can see, and that might lead ultimately, if the market fail to find the liquidity, it's not unusual to see that entirely breaking below. So both direction is equally viable, but you can see the market structure really I'm seeing very unusual. Yeah, very the market is not showing very clear direction. See, with the news there was a strong breakout. This is what happened when you see that there is a strong news, and then the market usually goes for this kind of extended consolidation, because so what happened, because there is a very strong breakout, there was a strong volume, and it gone for a consolidation, but in that consolidation you still can read something here, that this is the current support level, and this support the market is still, you know, whenever coming down the buyers pushing that market back above. Okay, so it's not saying that the market is going to completely come down. Instead we could see that here, if enough consolidation and then strong liquidity grab, you can expect it to go for another wave of bounce. because there is a, you see this 1 hour, this 15 minutes candle, which is the news one. It's a very large bullish candle. Okay, it's a full body green candle with a long wick. So after this kind of strong move, you can expect to have another move, and we can see that move has happened. Okay, it's a pretty strong breakout. That's a good one. It's a good move. We have gone into the profit area, near to the entry, where you can see that. Come on, come on. This is another false breakout. So we see that there is a breakout to the upside, sudden breakout. Any breaking news? If you look at the current sentiment, US consumer price index that we have seen was semi-annual. Okay, is it trying to break below here now? Worse. This is a red folder news. Let's look at what's happening. Semi-annual monetary policy report to the Congress. Okay. And was the Federal Reserve's semi-annual monetary policy report. Fed's was we want economic growth to be more broad-based. Iran's army spokesperson Strait of Hormuz won't open with US. Okay, so you have looked at that. Few more breaking news that has initially we saw the move the market. Now, if you look at that at this level, after this news move, So far at this level, the market shows that there is a bullish bias here that you could see in this area, and that's what we might see the market to here trend back again. If it successfully breaks out here, we could see that continuation of this market. So at this level here, I think enough consolidation, isn't it? Now time to move. The market is potentially moved now because it grabbed liquidity. We might see now some move. Already has shown that initial breakout. So this price action, for me, it's buying pressure here. What's up? Thank you very much. I'm good. I'm good. We are running buy trade and the market is just got stuck at this level, not being able to break. We saw that there was initial bounce here. Just liquidity 67 to 80 pip moved and then stopped. It's like a tortoise move. Have you heard the story of the tortoise and the fox? Slower move ultimately overcome the faster move. Can you tell why slower move overcome the faster move? Think about the sprinter and marathon runner. Tortoise and the yeah. Kids watch a lot of this story. It's a nice one. Okay, here the market is not here. Come on, it's not being able to. If you watch some more time like that, you'll feel like push that market up by your hand. Okay, so we had our previous session that if you looked at that one, the previous session we have opened, secured. Now this one still moving up and down. And if you look at this is 1 hour so far. Whenever breaking below, getting upside. So that shows that the market may remain here. if you have like you know, using the finger on the mobile phone like this, you can slide the price up, then it will be easy, right? Just slide the price up, take profit, and then open another one. Okay, so the trade is here, and now if you look at that overall, this trade, I'm still hopeful that fully the market is go up, hit our profit target. I've managed the risk accordingly, and as you know that I'm coming on live each day twice, including many of our analysis also I'm sharing in the channel. And also there will be full breakdown of this trade analysis and also any trade that I'm opening later. If you look at the yesterday, also we have opened one trade on euro dollar, has successfully gave us this one full profit target hit. We've taken that here. Now at this point, if you look at that, the market shows is still in an uptrending movement. So I'm on it for this movement back to the upside. And as with the progression of this session, I'm almost end of this session. I'm coming on live twice each day. So before I go with this live, the trade will be on. I'm not closing it. Either it will be a stop loss or take profit target. This is my profit target and take profit target. It's going to cross the entry level, so I would highly encourage you to manage the risk accordingly. If your risk is big, then you can still make it smaller and keep some profit, keep some close once it goes to the profit area. Secondly, before I go, for those who was waiting to join the premium group, currently it's available via the website. You can find link below this video on the website, and also there is a fully 100% discounted coupon for this week only. It's gonna not available next week, so I would share the coupon now, so you can use that coupon on the checkout and get into the lifetime access to your dashboard, courses, signals, strategies, everything. So that's the coupon that I have shared, and also the website link where you can find everything. So you can visit the website, and then wait, not that one, it's the guys, not that, that's the broker. So here is the website. You can visit the website and then use that coupon to get access to lifetime mentorship, strategies, signals, as well as trade ideas. Here we'll be waiting to see the market to finally break out, and for sure it's gonna break out in one direction. Most likely we could see still upside. The price action for me is still bullish, so I'm on it. And in our next live, and also there is an update coming later today with this trade and also the overall market analysis. Follow along for that trade as well. Thanks for joining here, and I'll see you again very soon trading live. Until that, stay well, stay happy.